Guys, I'm bringing you in this video 3 different strategies to invest in the TQQQ. And if you invested in any of these strategies over the last few years, well, over the last 15 years to be more precise, you'll now be a multi-millionaire. And to be a multi-millionaire, you'll only need to invest like $50,000, okay? In these strategies, what I like the most about these strategies is that the best way to invest in anything, but especially when it comes to leverage ETFs, is to have a systematic approach to it, okay? So these strategies will just tell you, okay, if you have these certain market circumstances, you buy, if not, you sell, whatever, or rebalance, and this removes emotion out of the way. Also, all these 3 strategies remove the need to predict the market and to time the market. No one can time the market precisely, but if you follow a few simple rules, and each of this strategy has only like really 2 or 3 different rules, if you follow these rules, you'll perform so much better than 99% of the investors out there. Number 3, these strategies are all about DCA, dollar cost averaging. So the dollar cost averaging DCA component of these strategies allow you to people like you that probably have a job, you receive a salary, you receive income every single month, and you can execute this strategy very, very well, and you'll be very, very happy because I have backtested these strategies. I have created the indicators that I'm going to share in this video that show you the results of these strategies. And if you have done any of these strategies over the last few years, you'll be a very happy person at the moment. All right, guys, let's get straight into it. Alright guys, my name is Henry. I'm the founder of the Henry Wealth Academy, where you can find a 5-hour-long course about leverage ETFs and ETFs. You can find also a 6-hour-long course about stock market investing with fundamental analysis. And also in my academy, I post every single day investment insights, my trade alerts, which by the way have an 80% win rate. Okay, 80%. So if you want to learn the strategies that allow me to achieve such win rate and the compound annual growth rate of like 30%, join my academy. Link in the description, 7-day free trial. And if you want to cancel, you can cancel, no questions asked, okay? I hope to see you there. Alright guys, but I want to share with you these 3 different strategies. These 3 different strategies are really based on 2 of them in books that I read. I've read pretty much every single book about leverage ETFs and leverage. I've been studying this. I'm studying my certificate in quantitative finance, which has a lot of math, and everything I talk about is based on facts and math. There is no biases here. I'm just showing you the facts and what really works to compound your wealth. Okay, that's my #1 goal here, okay? And the first strategy that I want to share with you is the SARS strategy. This is something that I have shared with my community already over a year ago. As you can see here in July 2025, I share about this strategy, and this strategy is based in this book here, Earn Twice the S&P 500 Model-Based Investing by Lee Eckholm. And he calls it the STAR strategy. I don't know exactly why, but I grabbed those rules and I created a trading view indicator to backtest the strategy, okay? So how does the strategy work? Have a few very simple rules, okay? So you start by investing in a portfolio that is 20% TQQQ and 80% SPY or VOO, the S&P 500, okay? So you have 20% allocated to the triple leverage Nasdaq ETF TQQQ and 80% into regular S&P 500 ETFs such as VOO or SPY. That's it, okay? And then you add your monthly contributions. Let's say you can save $1,000 per month. You add to your portfolio those $1,000 per month, okay? Add 20% to the TQQQ and 80% into the SPY S&P 500. And then there is one important rule in this strategy, which is if the TQQQ drops by 40% or more, you increase your TQQQ allocation from 20% to 40%. That's it, okay? So your allocation was at 20%. If the TQQQ drops by 40%, you increase the allocation to 40% on the TQQQ. So your SPY will be 60%. And then you let this allocation there for until it break evens and for 1 more year until you finally roll back to 20%, rebalance back to 20% TQQ and 80% SPY. Okay, so it's very simple. Let's jump on the chart. And what we see here is basically If the market has dropped 40% or more, the triangles, the buy orders turn into orange because you are deploying 40% into TQQQ. And if you are above the break-even and wait 1 year later for the break-even, you have the blue dots, which means that you are deploying 20% to the TQQQ and the rest to S&P 500. This strategy over the last 15 years would have returned 937%, which is not bad. So you'll have transformed $50,000 into $521,000. Not bad at all, right? So basically you have a 20% allocation to TQQQ, the rest to SPY. If it drops more than 40%, you increase the allocation to TQQQ by 40%. Okay, the next strategy is actually from this book here. $1,000 to $1 million proven strategies for triple leverage ETFs by B.D. Collins. This is a book I talk about in my leverage ETF course. Some of my members have been following this strategy, and I have some very, very happy people with this strategy. This strategy performed way better than the one that I just told you about. I talk about many other strategies, leverage ETF strategies in my course, including my own strategies that go like leverage and deleverage according to market cycles. But this B.D. Collins strategy in this book is very, very simple. So what it says is, you save money every month, right? And 80-20 strategy means simply that 20%, if the market is close to all-time high, you will allocate 20% of your savings into leverage ETFs, in this case to the TQQQ. It could be another ETF, could be QLD, could be UPRO, but in this case we are backtesting the TQQQ. So you allocate 20% of your savings every month to the TQQQ. If you are saving $1,000 per month, $200 go to the TQQQ. Okay, then if the market drops more than a certain level, instead of 20%, you will allocate 40% of your savings. Then if it drops even further, you will allocate 60% of your savings. If you allocate even further, you will allocate 80% of your savings. In this case, savings, I mean whatever you save every month to dedicate to this strategy. I'm not saying that you should go all in or anything like that. I'm saying that if you have saving capacity of $1,000 per month, you will accumulate those $1,000 per month every month, and you have a bag of cash, right? You have your pot of cash, and if the market is close to the top, you allocate 20% to the TQQQ. If it drops a bit, you allocate 40%. Drops further, you allocate 60%, and if it drops further, you allocate 80%. Okay, let's jump here on the chart. And in this strategy, the B.D. Collins 80-20 strategy, if we are within 15% of all-time high, we are allocating 20%. You are deploying 20% of your cash, okay? If it drops by 25% or more, you allocate 40% of your cash. 35% or more, you allocate 60% of your cash. And if it drops even further, you allocate 80% of your cash. So this is like a buy the dip strategy that is automated, okay? And how would have this strategy behaved? Well, the same $50,000 will be now $2.5 million. $2.5 million is almost a 5,000% return. Is, to be more precise, 4,968% return, okay? One of the beauties of this kind of leverage ETF strategies is that when you are DCAing into TQQQ, for example, you are smoothing out the volatility because you have less volatility. If you go all in into TQQQ, right, and tomorrow there is a crash, that volatility will be like very, very painful, obviously. But if you are allocating 20% to the TQQQ or 20% of whatever your savings are, and then the market drops and you allocate a little bit more, that cash cushion will give you buy the dip capacity, and then when it goes up, you'll be rewarded very handsomely. And the good thing about these leverage ETFs is that the downside is kind of capped, right? In the worst moments of the TQQQ, it dropped like 80%. 80% is painful, but look, in 2022, I was already investing in the TQQQ. I started investing like 2020. Oops. And And in 2022, you had this crazy drawdown of 80%, and I kept buying and buying and buying and buying. And then it recovers very, very well, right? And more than recover, because it gave me the capacity to have the financial independence that I have today, to be basically retired, or in other words, I do whatever I want, when I want, with whoever I want. That's my definition of retired. And I like to share my knowledge with people like you, and that's why I have my Henry Wealth Academy, and which you can check in the link in the description. 7-day field trial, no questions asked if you cancel. Okay, but this is the BT column strategy. As you can see, the returns can be really amazing. But you know what's even better? Is my adaptation of this strategy. In my adaptation, instead of the almost 5,000% return, you will get 5,140% return. So you will transform the $50,000 into $2.6 million. In my strategy, how is my strategy different? Okay, let's jump here on the chart. In my strategy, you continue to save money every month, okay? Let's say you save $1,000 every month, and the baseline is you deploy that cash, 20% of it, into TQQQ or UPRO. Or if you want to be more conservative, you can do QLD, which is 2x leverage NASDAQ. And if it drops 20% or more, you'll deploy 1/3 of your cash. If it drops by 40% or more, you deploy 2/3 of your cash. And if it drops more than 60%, you deploy 100% of your cash. So that's very simple, right? And this strategy is, again, one of the strategies that I teach in my Henry Wealth Academy. And again, these will have returned very, very handsomely, $50,000 to $2.6 million, which for most people is enough to retire, okay? Now, of course, there are many other strategies that I have covered here on my YouTube channel, in my academy too. You can have buy the dip strategies, just waiting for a pullback and then buy. Those strategies actually, interestingly, underperform most of the times than just a regular DCA, dollar cost average strategy. And the strategies that I show you here are actually combining pullback by the dip situation with DCA, regular DCA. So you get the best of both worlds and you get the best risk-adjusted returns. In other videos, I will bring you more strategies, okay, when it comes to leverage ETFs, including strategies that add a little bit of technical analysis, looking at 200 moving average and so on. And if you enjoyed this video, give it a like and subscribe, and I'll see you soon. Bye.